Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. 10 minutes of I think just wait for the YouTube page to kick in here. Hello, everyone. Welcome back. It's doing its thing, so that's good. I think we got to start off today's broadcast with something the Duke of Albuquerque just showed me, because I think this is absolutely spot on. He posted in the lounge just a moment ago, risk on or risk off. Wax on, wax off, risk on, risk off. And geez, this market is up and down like a horse drawers right now. So I get the distinct impression that political leaders, very uninspiring speeches in front of the global audience. It almost felt like maybe Mr. Trump just mailed in his speech this morning to the UN, but not very inspiring whatsoever. And I think the stock market itself is looking at this going, gee whiz. I put together a chart deck here for you guys, just give you a quick overview of what it is I'm looking at. We spent a lot of time in the daily brief today just going over sort of risk on, risk off, just to start the conversation. And no doubt about it, we've got risk off proxies all ratcheting back up against the top end of their ranges. We talked lots about that recently. We'll take a little closer look at that in a moment. And risk on assets just getting their lunch handed to them. And interesting, I spent a lot of time in the daily brief today talking about capital preservation. Traders are paid to worry. We never expect to be right 100% of the time. Just get used to it. And we've had a lot of sort of air coming out of the crypto market. In a weird sort of way, I think this actually correlates well with me if we think of Bitcoin as a risk-on proxy. The whole sort of altcoin market was starting to catch a bid. You could see a lot of sort of the news articles that I see on sites like Kevin's site here. We're starting to talk uppy price objectives. There was a guy who came out with like a $300,000 Bitcoin price objective. Oh boy, absolutely crazy. And literally on the heels of that backed event, which has turned out to be almost like a non-event, I heard that it traded like a total of 72 Bitcoins or something yesterday. So we're up to 48 Bitcoins traded on this back thing today. Long and short of it here, I don't think it was the catalyst that everybody was looking for to launch a new bull market. But fascinating to see how stocks and risk assets all jumped up on the open. We're feeling optimistic. There were like sort of news articles that China and America were going to make peace and, trade talks and all that kind of stuff. Mr. Trump had his speech in front of the UN, and literally the moment that he was done, the whole market just rolled over hard here. And it seems to be being led by the tech stocks and the NASDAQ. And so crypto sort of tech related, there must be some sort of correlation to that. I don't know. But long and short of it here, like we said, right out of the gate, we're getting big messages of risk assets getting their asses kicked, risk off assets all catching a bid nicely today. I always like to start off these conversations, quick boo at good old US dollar index. And I kind of like this idea, Tuesdays is our trend following day. So we spent a lot of time in the daily brief just simply going over what do the higher time frame trends look like. We took a look, of course, at the currencies. US dollar, still the trend is up. We have talked to you guys in this public broadcast about potential weekly fractals, inside bars. Things are still pointing up. Euro, which makes up 35% of the US dollar index, pointing down. Some interesting political events coming out of Great Britain, but still the trend is down. We might even empire out here. We'll watch how that goes. Risk off assets catching a bid. There's the yen still in a bull market, and I think that's kind of a message that I saw across a lot of these markets is, and you could argue to a certain degree in crypto as well. When we took a look at a lot of these trends, the trend was still down on a lot of these crypto names. We just did nothing more than sort of dead cat bounces. And you might argue that for the risk-off proxies, it's the exact opposite. If we look at something like, I think I had the gold market on here. Where the heck is it? Where are you, gold? Yeah. So off the weekly basis, trend is still up. Way too late to chase this, of course. It's just a question of did we top out because maybe we went a little too far too fast. And you can see a lot of these pullbacks, they never even got back to the moving averages. It's fascinating to see my palladium just keeps moving to new highs. Crazy palladium. And I noticed that little palladium stock that I'm long, it also printed a new high today. It's backed off a little bit, but we won't talk about that today. So back to our deck, US dollar still pointing up, a bit of a down day, and why? Well, I think money is coming out of the stock market in earnest and pouring back into sort of those risk-off proxies. Stock market itself, and excellent analogy, and I talked lots about this recently, where it felt like the oil market was finessed to get back above that key $12 strike price on the oil ETF, and now you can see that they're slowly working its way back down here. So really, really good commentary on sort of market manipulation around derivatives expiry, and now it's continuing. I don't see any reason why oil can't fill in this gap here. As I had said sort of earlier, the one market that kind of bummed me out because I put myself on a put option purchasing program here recently. I got 2 of my puts on the books, but for some stupid reason on Friday, I just couldn't pull the trigger on buying my 3rd put, and now, of course, I look like an idiot. So a little, Brian's got to do some journaling. Brian's got to get in touch with his emotions. Why did he not act when he said he was going to act? But that's a conversation Brian has to have with Brian. But anyway, look at it. I have been talking for quite a while now. I'm a really big fan of a sort of cycle analysis. And we've been squawking for quite a while that been looking for a equity market peak right into this catalyst of this cycle. And sure enough, it looks like maybe we've come a little bit a day or two too early. Mm-hmm. So now, believe it or not, I actually have to be thinking about 25 bars of down here. This is going to be a bit of a slog here, folks. It's already started, it looks like. Boo, hiss, hiss, boo. So, anyway, you shake it here. I do have a couple puts on the books, so we'll keep working those, and I'm into profits now on those, but I'm a little cross at myself that I wasn't able to get on this one that I was supposed to do last Friday. We'll watch how the week ends for that final put. If the market just craps out here, then I've missed the trade. But if I can get any sort of counter trend rallies back up against the top end of the range, I definitely will be all over that. And my sort of thinking here this morning, and it really pissed me off because it was just working so nicely. But my thinking this morning was there's a big old hole on the gap up here on the S&Ps that needed filling in. So if I'm going to add to this trade, it will be on the anticipation of some sort of counter trend rally back up to fill in that gap. Well, we'll see how it goes. Only time will tell. Long and short of it here, risk on assets are coming off today. No doubt about it. And then the flip side of that conversation, the risk off assets, well, they're all rallying. So I have on here just today the bonds and the gold. If anything, I'm actually kind of proud of myself that I sort of mapped all this out and said, okay, if I was going to short the gold, where do I want to short it? I drew these fibs, reload zone 61.8 to 78.6 fib levels. Highlighted the gaps on the charts and just said, look, I'm just going to be patient. I'm going to wait. Let's see if this trade actually sets up. So the yen, we're not there yet. I beg your pardon. Yen is just getting going. I think it's still got a long way to go. Bonds, we're not quite there yet. We're getting closer, but it's still a little ways to go. The gold, interestingly enough, leading the charge, it is getting up into that neighborhood. You can see where the gap is on this gold. I think this is a gold ETF, yeah. So I will be looking for this gap to be filled in. And then, like I said, just as I sort of written here, if I get signs of a nice rolling top here, then I'll be in there on the short side. The interesting thing, too, here is stock market malaise. Can I get a counter trend rally back up top? As long as the stock market is heading down, I expect these things to rally up. Maybe we get like a blow off top over the next couple weeks in through this event as the stock market tries to find some sort of footing down below. And then that sets up the trade. But this is still probably a week or two away at best. All right. So that's sort of our conversation about the broader market. Heading on over to crypto. I didn't, me personally, take the trade on things like Litecoin or Ethereum per se. I'm playing more through the stock market. And I bought this Riot blockchain as an interesting proxy on whether this market was going to bottom. Hopefully you can see the W down, up, down breakout. It's interesting. On Tuesdays we have our TRI secret options formula meeting, and we actually had put an alert on and said when we come down and fill in this gap, then we'll take a serious look at the options. So here we are working our way back down. If we blow through this low here of 176, I'm gone. Simple as that. But all we're doing right now is just sort of coming down, playing with this gap. I would expect this gap to be filled in, but it's interesting to see how there is some buying interest down here at these levels. So that's sort of my crypto proxy at the moment. And like I said, if we lose this low, then I just walk away. If we look at crypto itself, it was interesting. Been following, there's a few charts we can talk about here. The one that I wanted to bring to your attention, good old algo, just seems to be doing its thing. You're never going to build a system that's right 100% of the time. And the algo is very much a trend following system. So if market dumps and is threatening to go trend and then halts and works its way back up into range, then these kind of algo signals fail. It was interesting that on the heels of this fail, the market actually turned around, put in a very fast little buy, and that one worked as we worked our way back up to the top end of the range. Then came down, put in a lot of M's, just a ton of M's, and flashed algo sell signals along here. And I noticed that on today's dump, we actually hit the 2-to-1 objective, which is sort of the knee jerk. Sell half of the position at 2-to-1, move stop to scratch on remaining. So that's where I would be positioned algo-wise. Also, too, I put out tweets yesterday to the effect that, really, really good lesson. And I talked yesterday's video about trend lines acting as resistance and then acting as support. So here we are. We never did get a W on the other side of the trend line. Super important. I hope everybody's learning this stuff. We actually inside bar failed here. And then last night, just out of curiosity, I threw on these bot levels and gee whiz. And I hate when I see this in hindsight. It drives you crazy. But we have a really big bot that's sort of set up off of this fail. And notice that inside bar failure that I made reference to repeatedly recently, fairly close to that actual bot trade level. from the algos perspective, and for people playing lower time frames, I got washed out on this big up candle here. But I did notice a bunch of people. Daniel, way to go, man! You fucking rule, man. He strapped on the short on the other side of this counter trend rally, and he actually took profits on this smaller AB equals CD target tag this morning, which I was so impressed. I mean, damn, these TRI traders, they are really good. So you can sort of see what's how that played out. Boobity boo, boo to shmoo, hit. I think off of the higher time frame, that really big buy, and I don't know whether you could take it or not, but nonetheless, it is what it is. Those move stop to trailing levels, move stop to scratch levels. Had you taken this short, got in off this inside bar, that diamond that we talked about, I think you basically have your stop at scratch now. And, if this thing is still a range and we hold these lows, then you're fine. You just walk off at scratch, big deal. But I was very, very impressed with TRIers this morning, reporting that they had profit targets hit and they booked profits. Way to go, Daniel. Nice trading. Interestingly enough, sort of off of that bigger time frame perspective, still think that this is looming out here. Everything being equal, I think we should expect at least a 50% retracement, make Mr. Gann happy. Ironically enough, reload zones, you can see 7,200 all the way down here to 5,400 area. That's not out of the question for me. And then remember, if we're going into a risk-off kind of environment and our sort of talk about, is Bitcoin a risk-off, risk-on proxy, and as a result, if we're in risk-off, this thing should come down. If the stock market is, say, cyclically topping out there, 25th of September, basically everything plays up here. I can completely understand. Like I said, lower time frame players, they were actually told to exit shorts and book profits. Way to go, Daniel, again. But I suppose I can understand guys who are real, gamblers, risk takers coming in and just simply buying into these tails now and just risking to a break of these lows. That's pretty risky stuff, considering we do have this inside bar failure here. And what I'm also noticing too, which it's kind of a bummer, because we kind of wanted to see a lot of these bottoms hold and the trends start turning up, but I'm starting to see a lot of failures across a lot of these altcoins. So, whether it be some of the ones that we saw perking up here recently off of weekend shows and stuff, a lot of these are still working. They haven't failed, but I think probably the general message is that, if we look at our trending models, we got lots of dead cat bounces into moving average resistance, and then things just started to fall apart on the other side of that. You're not always going to be in a bull. I think I said the other day, traders are paid to worry. And sometimes you have to just simply go into capital preservation mode and just man up, or for Colleen, lady up, and just, your setup failed, got to walk away, take your loss, next bus in 10 minutes. And I think a good example of that was Litecoin here recently. Tried to double bottom, broke out, things were rocking and rolling, and then, backed event coming up, and then literally the risk out of the market just collapsed. And so this Litecoin double bottom, its lows were tripped up. Had you taken this risk, I think you actually have to just walk away. It sucks, but it is a trader's life. Next bus in 10 minutes, as they say. All right, don't mean to end on a sanguine down note, but that's basically your market as I see it for today. Try and play from a position of strength. Capital preservation here, I think, is critical. If we are going back into a risk-off kind of environment, then my hunch is crypto is going to be sort of on the sidelines for a little while. But we'll see what happens. Only time will tell. All right, have yourselves a good day, everybody. All the best. Try and play from a position of strength. If your setups fail, you got to obey your plan and get out. So, there you go. Have yourselves a great day, everybody. All the best, and bye for now.